Hi, everyone. This is Jason Burak of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today, Mo Dawood and I are joined by the Doc from Silver Doctors, the up-and-coming silver and gold and precious metals information website. Thank you for joining us here today, Doc.
Oh, it's great to be here, Jason. Mo. Thanks for offering the invitation to come on your show.
All right, Doc. The first thing I wanted to talk about is your background. How did you get into silver gold market, and what made you wake up and start to realize the fallacy of the fiat currency that we have in this country and around the world, and what made you decide to invest in silver and gold?
Sure, that's a good question. Honestly, I got in pretty early. I actually went pretty much all in. Just about at the time, it was just about 50-50 into gold and silver. And about, I think it was around 1999, to kind of give you a little bit of perspective price-wise, we were looking, I think my first and major silver physical purchases were around like 480, 478, somewhere around there, and gold was in the upper 270s. So that's about when I first got into the market. So since then, I've continued to kind of accumulate but I've pretty much been almost all in the sector ever since then. And today, I am pretty much all in.
Doc, did you start reading like Casey Research or Jim Sinclair or Daily Reckoning or some of these other commentators? Did any specific person or commentator particularly wake you up and influence you?
As far as influence, I would have to say, actually, personally, my own father, he's the one who kind of turned me on to the market and gave me pretty much the fundamentals of precious metals, and he's the one who encouraged me pretty much to go all in the late 90s. But yeah, as far as commentators, I would say definitely Jim Sinclair, JS Mindset. I probably started reading him the first. And I would say overall, in my opinion, he has the best understanding of the current financial situation and does a pretty good job, really with no strings attached. He's not trying to plug whether it's his own mining company or anything else. He pretty much does it as a service, just educating small investors.
Yeah, I remember when I first got started investing in silver and gold after the 2008 financial crisis, when I started questioning the bailout and the TARP and the monetary stimulus and the fiscal stimulus by the last two presidents that were the current and the last president that we've had. And also when I met Jason, he introduced me to silver and gold investing as well, and I'm grateful for that. But it's good to have someone in your own family that was able to get you invested in silver and gold. My next question to you is about your outlook for gold and silver market for the next 18 to 24 months. What is your price target by the end of 2012?
Everybody wants to know price target. As far as, I guess I'll give you silver first. Currently, I think we're in a period of consolidation right here. If you look at kind of a 10-year chart, silver gets excited, overextended, makes little mini parabolic bull moves, and then if you look at like a 10-year chart, it kind of consolidates and works that excitement out over somewhere on average about, say, 18 to 24 months. I think we're probably well into that consolidation here. I can see that consolidation continuing another 6 to 8 months. So probably I do think we've most likely seen the lows. I think we may consolidate for a few months further before $40 is taken out with conviction and you see another tack on 50. I think you'll probably likely see 50 as another pretty major battleground, and we won't have major excitement return to silver until after $50 is taken out. As far as gold, Jim Sinclair, who we've already mentioned, he's calling for a $1,700 to $2,100 range for gold for this year. I would probably echo similar sentiments. I think gold currently it's been below its 200-day moving average, which throughout the whole bull market has pretty much been perfect time to accumulate or add to your positions, or for any new investors, that's a good time to look to start to make new positions. So, so I think personally, I think gold and silver either have bottomed or are very near bottoming. I also like to go by sentiment, and sentiment last week was pretty bearish, just across the precious metal spectrum. So if we haven't bottomed already, which I think quite possibly we did last Thursday, I think we will soon.
Yeah, Doc, and I think those are some pretty good and pretty conservative insights. And I think also gold and silver during the leap day takedown, well, we can call it a takedown, but in my humble opinion, from classic technical analysis, it looked like they had both broken key overhead resistance on strong volume and were about ready to break out. And then the next day, we just had the Bernanke speech, and then they just got trashed in the paper markets.
Yeah, it was actually the same day as the Bernanke speech, and I had a conversation with David Morgan towards the end of last week, and he shared the similar sentiments that he actually alerted his subscribers like a buy order that morning that, like as you mentioned, significant resistance had been taken out with silver, and there really was a gap up to 40 from the September correction. So silver was looking to move pretty strongly. So, like as you mentioned, we documented on Silver Doctors that day, pretty much coinciding with when Bernanke started speaking and Ron Paul waved the round of silver at him. There was about 225 million ounces of paper silver dumped on the market over the next 30 minutes, and we saw silver move down about, I think it was $1.50 that day, and corrected pretty severely over the next 2 to 3 weeks. I think it was down about 14 or 15%.
Yeah, and I think David Morgan said that there ended up being over 550 million ounces of paper silver sold short within that one day or something like that. Now, I want to ask you your opinion here, and David Morgan's brought this point up recently about how they're in a managed retreat in the paper markets. Do you think that the war is being won where they have to use more and more paper and it's a law of diminishing returns, and they're dumping, like I said, over 500 million ounces of paper silver on the market, and it's only moving the price down $2, and then Eric Sprott comes in with a big, large PSLV buy order and buys 10 million ounces, and the price moves up. So the return on investment is a lot more efficient than buying physical, and it's starting to move the price up faster than they can move the price down with paper.
Potentially, but you also have to look at where the silver market's at today. I mean, when you've had a run up to like 49.70 like we had in April, you have such a massive new amount of longs that it doesn't take much paper selling to trigger a lot of stops, where now that you've corrected nearly by 50%, there's not a lot of weak hands left, if that makes sense. So it's hard to say for sure, but I think part of it may play into role of the current market currently is consolidating in a much lower base that kind of like if you just think of it like a spring analogy, it's already compressed, so that also would it's going to take a lot more paper firepower to move the price a little bit.
Now, why do you think the bank is manipulating the silver and gold market? What are they trying to achieve by doing this? A lot of people who look into this silver manipulation always ask this question: Why would they do this?
Well, silver and gold manipulation is all about manipulating interest rate swaps. So I mean that's the big thing is interest rate swaps. I mean, J.P. Morgan alone I think has over $70 trillion in interest rate swaps. I've kind of analyzed that. Not a lot of people know this, but J.P. Morgan requires, based on, I think this is based on Rob Kirby's analysis, over $40 billion a day just to like square their hedge book in like interest rate swaps. So, I mean,
wow,
that's a massive, almost unfathomable number. But yeah, it's all tied to interest rate swaps and floating the debt and kicking the bubble just a little bit further down the road, and trying to continue the current system with the dollar.
Okay, so you would tie that in there then, that this is about making the dollar look, the perception then, which is all part of Keynesian economics then, with perception management, inflationary expectations, this is all part of the perception then of continuing to make the dollar look strong against the euro and other things that could possibly compete with the dollar then.
Oh, it's all about perception, and that's why, like when the Swiss ties their currency to gold, gold's taken down half an hour before that. Whenever Bernanke makes a big speech, gold and silver are rated concurrently. It's all about perception of the dollar and other fiat currencies.
Another question I get a lot about the manipulation is if the U.S. government is involved in this manipulation. I mean, they have a very strong interest in making sure the dollar is, being used as the world reserve currency and being used, to buy oil as well, the petrodollar. Do you think the U.S. government has a strong interest in seeing, the silver and gold market down and depressed?
I mean, they do for now. I'm a strong believer that Bernanke's last quiver, if you'd say, like in his, last arrow in his quiver, is gold revaluation. In his famous helicopter speech from about 10 years ago, if you go back and study that and read that, he's followed his playbook to a T, and really the only thing, the last deflation fighting tool that he hasn't pulled out yet is gold revaluation.
Exactly, Doc. And, this is something that FDR did too. When nothing else would work to stop the deflation, FDR confiscated the gold and then revalued the gold price and devalued the dollar against gold, and that's what stopped deflation in its tracks. And I think, the analogy you said is the last quiver. I call it the nuclear option, because central bankers do not want to give gold the respect as money. They do not want to give it any credibility or credence. But if nothing else works, then they will be forced to do this, I think, too. And I think this would be part of a bank holiday and forced devaluations and perhaps price controls and capital controls and currency controls.
Right.
Oh, okay. Well, Doc, I want to move to the mining sector here. And we covered some of the dislocation here between the paper market and the physical market, but we do still have higher gold and silver paper prices, and the mining stocks are down so much. I know energy prices have gone up a little bit, but the mining stocks, especially the larger producers like Newmont Mining, they just have so much free cash flow and earnings right now. They haven't had these earnings really ever in their history. Why do you think the mining stocks are lagging so much, especially the producers that have increasing profit margins and cash flow? Why do you think they're lagging so much?
I would say the main thing right now is just sentiment. Anybody who's newly invested into especially the silver sector, but either gold and silver, in the last, say, 12 months, silver-wise, is probably underwater. And most investors, when they've heard the gold and silver story, and they expect a large gain the day after they make the purchase. And I'm sure we'd all love that, but most investors aren't prepared to make an investment and watch it go down 20 or 25 for, say, in silver, 40% in 6 or 12 months. So I think a lot of that in the mining shares currently has to do with sentiment and market emotion.
Do you think also that this is because the value investor community has just not bought the story yet, that the earnings are there, that the dividends are going to be increases, that these are tremendous values yet, and that as there's an increase in dividends and share buybacks and more companies that are actually creating shareholder value instead of diluting their shareholders or destroying it, do you think that'll put a larger, higher base in a lot of these stocks?
Oh, sure. I mean, the bullish fundamentals for the stocks are immense. I mean, outside of like MF Global type risk, but I mean, outside of that, if you can hold a mining company that has good in-the-ground assets and good reserves, and particularly one that's in a political climate that kind of protects you as the investor, you're going to see massive gains, likely outperforming the base metals throughout the rest of the bull market. But again, political climate is a big part of choosing your mining shares, in my opinion.
Good point. And one of the main reason that people invest in a mining stock is that you get leverage when the bullion prices goes up, but as people have noticed, it hasn't been happening for the most part for the past 18 months. Do you believe that the mining stock can outperform the gold and silver physical market?
I'm sure they can, and they will once excitement returns and you see another bull leg kickoff.
Great. And how do you recommend people that should allocate their portfolio with physical gold, silver, and a mining stock? So in another word, if I gave you $100,000 today, how would you invest it?
Yeah, I can speak for myself personally. My own personal holdings, I probably right now about 90% physical, and probably of that physical, 2/3 is silver, 1/3 is gold, and I actually also, it's not exact fractions because I also hold a little bit of platinum and palladium in physical form, and my mining shares kind of round out the rest. So that's kind of just a little play money speculative.
Okay, great. So I guess it depends on your risk tolerance. If you like to take more risks, then the junior mining stock is the place for you to be. But if if you want to be more conservative and just want to have the exposure in the physical gold and silver market, then having more investment into the bullion would be better for you. And
and I think sorry to interrupt, Mo. And I think, Doc, a lot of the case, like I said, with the miners is that they have been very poor keepers of shareholder value. They have destroyed a lot of shareholder value with dilution, and management teams have not executed, et cetera, for a number of years now. But as I think with some of these companies, to use like an example, like Agoro Gold Resource Corporation, which is paying out now physical dividends in physical bullion, so you can buy and hold your shares of this one company, and I'm sure other companies will follow this model, where you don't have to worry as much about the value of the shares going up and down because you're going to get your dividends paid out in bullion.
Yeah, I mean the management of a mining company is critical when evaluating a stock. First Majestic's executives, they have a pretty good understanding. Was it Endeavor also, I would say? I think Endeavor was the company who bought down some of the PSLV's recent offering. But yeah, you're exactly right. I mean, as the bull market progresses, as we reach the mania phase, when Joe Public becomes involved, they're all kind of going to go up indiscriminately. But for now, and I guess kind of going back to your question of what would I recommend, probably for the average silver and gold investor, unless you're a skilled trader, it's going to be safest for you just to kind of dollar cost average. And like, I'm a big proponent of accumulating into price weakness. So, like when you see a big smash down, that's the time to lock in your purchase. When everybody's saying the price is going to go down further, and you feel like waiting a little bit longer, that's when I like to buy personally. Versus the stocks, even gold and silver investors who probably a little more highly educated about financial sector than your average investor, you're still not a professional, and you're likely just to come to your emotion and kind of chase price higher, which is, at least from a short-term perspective, is going to get you into trouble. But the trend will take care of you over time, as long as you are, as Jim Sinclair says, as long as you're right and sit tight. But the sit tight part's the hard part.
Yeah, and I think that's a very great point, and it's very mentally difficult and mentally uncomfortable for other people we've tried to educate on the sector is, when the stocks start going up, they want to buy more, and then that's the time when sometimes, if you're a trader, you should take some money off the table and build cash reserves and maybe prepare then for a dip. And I think that's why people should not necessarily be completely 100% invested in physical bullion and mining shares all once. They need to keep a cash position for in case of those paper smashes. Doc, I wanted to ask you one question here, specifically about the mining shares, and this is about naked shorting. I was wondering, because I spoke to a hedge fund manager friend of mine, and I won't give his name, but he said one of the major banks could easily naked short more than 20% of all the float of every single gold and silver company, and he said they could do this no problem with their capital reserves right now, and that's just one major investment bank. I was wondering if what you think about the naked short positions in a lot of these mining companies, because right now it's just too easy to naked short the companies, and I think it's also technically legal. The regulators aren't looking, et cetera, et cetera.
Sure. I'm not sure if you guys read Dan Norsini, but he's probably writes the most often and the best on that topic. And yeah, it's worked for him for the last 5 to 10 years, but at some point they're going to get overrun and have to resolve that position. It can't continue to work for the duration of the bull market. It'll work for a while, but at some point they're going to basically have to give that up.
Great point. And I don't know if you knew about this, but recently Eric Sprott called out for all silver producers and miners to hold a portion of the silver inventory. Do you believe more mining companies will start to do that? I believe Endeavor Silver started to hold back some of the silver inventories and hoping that to kill the short and get the silver price to go up a little bit.
Yeah, I think you'll start to see more and more of that. Endeavor was the biggest one who did it. They held back quite a bit the fourth quarter. They ended up selling it in the first quarter for I think about 20 somewhere around 20% higher than they would have. They just would have sold it as they produced it. So yeah, I think we're starting to see that trend pick up a little bit. I expect it'll probably continue to increase.
Do you think, Doc, that more of the silver miners will start to copy companies like Endeavor Silver then? Because I noticed a lot of snide comments from a few CEOs about this, that like, no, we don't want to do that. We don't want to hold any inventory. Our job's just to get the cash. But I mean, if you get the cash and it's sitting in the bank and it's dangerous in the bank for 0%, why not hold back a certain amount of your inventory and wait for a higher price then?
I think they will. I mean, money speaks, and when Endeavor shows their bottom line and how much more they made based on that decision, it's going to turn some heads. Everybody's not going to rush out to do it tomorrow because, I mean, honestly, there's a lot more involved than you can't just flip a switch for a mining company to store all that. But yeah, I think you'll see more and more try to replicate that success.
All right. Well, we would like to thank you for coming on our podcast and giving us your time. If people want to find out more about what you do, where can they go?
Our website is www.silverdoctors.com. We're currently redesigning our website, so the new website should be out in a week or two. Our website kind of focuses on precious metal news and analysis. And we recently actually started selling bullion pretty much almost at break-even cost for us, just for the benefit of our readers. So they can check that out there. But primarily our focus is on precious metals news and analysis at silverdoctors.com.
Okay, great. Well, thank you for coming on our podcast. We hope to have you back on in the near future.
That was my pleasure. Thanks a lot, Mo and Jason.